Hey guys, welcome back. In today's video, we are talking about how AMC will break the algorithm, the AMC dividend, Citadel's investigations, and many more in this video. First, we're taking a look at this. This image tells you everything. AMC is not following its industry after a record-breaking weekend. AMC is also not following the general market. AMC is again following a video game retail store because that's how the market operates. So I want to talk about all these factors here because firstly, we can take a look at this. With the Thanksgiving weekend box office wrapping up, it looks like Q4 is now at just over 1.42 billion with 4 weeks to go on the big names. So we talked about this, the Thanksgiving box office made a record. We've beat all previous years, including pre and of course post-COVID market. So we understand that right now we are in an exceptionally good market, and you can see how this reflecting on the industry as we see Cinemark Holdings recently reached a 52-week high of 3607. So what we can see is that Cinemark, obviously someone within the industry, is benefiting from the recovery and the strong growth, and you can see as we see them make new all-time highs. But when you take a look at AMC, we obviously see the opposite. AMC has climbed a very tiny bit. We've recently seen it kind of at a low level of 420, 426. We're now at 504, but nevertheless what we are not seeing is AMC making an all-time high or AMC going to the market cap that of course Cinemark is in, despite the fact we're seeing such a good box office and how it should be reflected within the industry. So this is the first thing that we talked about. Now in our previous video yesterday, we talked about how obviously that this is clearly not a true reflection, but nevertheless that institutions are still willing to buy into AMC as we see the institutional ownership of AMC actually still increasing. So in the time where we're seeing the AMC price not go up steadily, we are still seeing people that are buying in because they understand what potential there is for the biggest company in the industry that's not only recovering but actually indicating strong growth. The next thing we're looking at is obviously talking about the dividends. So this is something that again is only hinted right now, but it's something that we've talked about in the past. And what it is obviously Adam Aaron continues to say, to see so many movies continue to succeed in theaters worldwide is a win for AMC and our shareholders, for our studio partners, and most importantly for our movie going guests. So the reason why I'm saying this is a hint is because we've seen how Adam Aaron in the past has never talked about something directly, but has always hinted at things. And now in this case, it's obviously talking about shareholders. Now, the context for this is obviously reflecting in terms of the recent success of movies, of the box office. Now, the reason why this is important is because we've talked about with a very good box office, AMC will obviously profit a lot from this. And there's multiple reasons why. Because if you first take a look at this, so we're not going bankrupt. I was told by the same media that lies about everything else that we were, though, where we can see for more than 8.8 million moviegoers worldwide Wednesday through Sunday. In the US, AMC sets Thanksgiving holiday period records for attendance, admissions revenue, food and beverage revenue, and total revenue. So both these two are reflecting upon each other. And the reason why I say this is because we can see how with a good box office, not only is AMC making money from, of course, the ticket, but also from other venues of revenue streams as well, such as we talked about food and beverage and of course others. And that itself is reflecting on the fundamentals. The very fact that they are able to benefit from this and make more money obviously puts them in a better financial position. And that is the most important factor to understand whether or not AMC will be issuing out dividend. Because when AMC is able to make a lot of money, what they're able to do is obviously pay off debt. And when they're in a healthy cash position, they're obviously able to issue out dividends. And so we talked about this, how in a recovering period like this is very, very important. And it also reflects to why we continuously see the suppression of AMC. Dividend is something that is extremely strong for AMC. We've talked about this in the past before, but just to kick a quick brief, it's about understanding that when a company issues out dividends, the short sellers are actually responsible for paying their part first before it comes to the company's issue to actually pay out the dividends. And so one of the things that's stopping AMC from paying dividends, it's obviously their debt problems, and by suppressing AMC's price, they're obviously able to raise less money, therefore less money to pay off the debt, and it delays the whole process. And is why we talked about why dividends is so powerful, and is why we always try and focus on the potential hints and clues that are for that dividend issuance from AMC. Now, again, going back to one of the things we talked about, AMC's again following a video game retail store, you can see here GME is experiencing strong bullish institutional flow, particularly with many traders holding call options at strike prices of $30 and even up to $40. So what we talked about is AMC following GME. Now, like we talked about, it's kind of a vice versa situation. The reason why I say this is because the mutual short sellers of both AMC and GME. So when we see GME run, AMC is also running because the pressure is being taken off. And again, the same applies for when AMC runs first, GME will also run along with it. What we're seeing right now is both strong institutional flow into both AMC and GME. Now, we also have, of course, other factors as well. There is more media coverage on GME, but you have to understand, it's something we talked about in the past. The reason why the suppression is stronger on AMC than GME is because AMC is at a lower price. You can see GME to be at $27 and AMC to be at $5. So it's obviously easier to create synthetic shares because it's cheaper with, of course, the same amount of money. They're able to create more AMC shares than they are for GME shares. And that's why, you know, we can see in terms of the stronger suppression in AMC. But like you said, it also means that when they have to pay up and buy back all these synthetics, because there are more synthetic shares for AMC, the price will obviously go even higher because they have to buy back more shares. Another thing to understand is GameStop's quarterly report is set to be released in 8 days on December 10th, 2024. Recently, the company has sold all its stores in Italy, transitioning to a new brand, Game Life. And again, this is something that we talked about, the fundamentals of GME. Now, we've covered the fundamentals in the past before. GME and AMC are in two totally different positions. Whilst they face the same mutual short sellers, they're very different in the fundamentals. AMC is seeing improvement, they are innovating, they are improving, and they are obviously investing in new revenue streams all the time. And we've seen this with their investments, we've seen this with, of course, the Coke machines, and of course, any other stuff as well. With GME is that whilst they don't have any good revenue streams so far, what they do have is an extremely healthy cash pile that we've seen in the past before. And again, both are in good fundamental positions, but both have different fundamental positions, and so we'll have to understand. And this could be a reason for why we're seeing the institutional flow into GME right now. Now, let's talk about this. Kash Patel and DJT CEO Devin Nunes are investigating Citadel and market makers for naked shorting and manipulating stocks. And you can see Ken Griffin, Citadel, and naked short sellers may be in serious trouble. The new FBI director nominee, Kash Patel, is on Trump Media and Technology Board of Directors. The company alleged Citadel is participating in market manipulation with naked shorting in DJT. And this is something we've covered in the past, and is obviously understanding this. Like you said, many of the short sellers that you see in other stocks are very likely to be the same ones that are shorting AMC and GME. Now, in this case, Citadel is not only shorting AMC and GME, but also DJT. And what we also are seeing right now is, of course, how they're being called out for this. If we are seeing an investigation, and we've talked about with, of course, Gary Gensler coming off of the SEC, and we're seeing, more and more people that's coming to power that are against naked short sellers, we are seeing more regulations, and that itself is extremely important because these are the very factors that we need to really attack the naked short sellers. When we are able to get more regulations, when we are able to get this investment, this is what's going to help us. And you can see how that's obviously going to be benefiting for the retail investors, because when we do see these things, we're going to be seeing less naked short selling, we're going to be seeing less market manipulation, and with that, we're actually able to see a real price discovery for AMC. And like we talked about in the past, that will originally lead kind of the first run of the squeeze, because if we are able to see the real price discovery, we firstly understand this: AMC should not be a $5 stock. AMC should obviously be way higher. The very fact Cinemark has reached a 52-week high of 36.07 is something that AMC should be doing as well. The very fact that we are not, it's obviously a showcase of how criminal and corrupt this is. Now, if we're able to get the real price discovery, then we can of course already liquidate many short sellers, many small and medium short sellers, and and that will increase the price even more to eventually liquidating the big short sellers like Citadel and like Virtue as well. And that's why we talked about why this is important. Now you can also see Citadel founder Ken Griffin was opposed to payment for order flow in 2004 before adopting the business model and using that conflict of interest to the advantage of his hedge fund and market makers. Griffin said PFOF creates conflict of interest and should be banned. And so you can see how what was once something that he's against is now something that he actually exploits to make money. But with what we talked about, new regulations, very likely that we're going to be seeing the limitations of this, and that's going to aid the retail investors. Anyway guys, thanks for watching. I'll catch you guys next time.